Yes, hello traders. I hope you're all doing well. This is Traders Hub Kenya YouTube channel where we'll be posting trading educational content and weekly markets analysis every Sundays, Tuesdays, and Thursdays. And so without wasting time, let's jump on the charts and do our weekly technical analysis. Yes, as usual, normally we mostly trade dollar denominated pairs. And so for that, we have to start with dollar index, or other people call it DXY. Yes, and as usual, it's top-down analysis. We'll be starting on daily time frame. As you can see that the dollar is on a bullish trend, but yeah, bullish trend. But currently, it is in a corrective phase, and you can see that it has corrected to 50%. But I'm anticipating that it will be correct. It will correct more to around 61.8 and take probably this liquidity before we start pumping to the upside. Yes, and to see that clearly, we have to go to the lower time frame, which is 4 hour. Yes, on 4 hour time frame, we can see that immediately after price, you can see that immediately after price printed this structure, it has changed trend or changed character, and it has been printing structure to the downside. And for us, we are on this structure here. Yes, and of course, after every break of structure, there has to be a correction, and so we can see that the dollar corrected to around 98.8, around 98.8 range, and this was just a liquidation or gapping up and down due to the fundamentals and the war in Iran. Yes, and immediately you can see that immediately when the price gapped up, it couldn't sustain this price. It had to go down and close lower because the structure is on the downside. Yes, and we can see that we broke structure and retraced to the premium levels before we plunged again. Yes, so currently we can see that on 4 hour time frame, the dollar has broken structure to the downside, and so we are anticipating it to correct to at least premium levels before we go lower, and take this liquidity and fulfill the 61.8 Fibonacci retracement of the daily time frame. Yes, and for us to, as usual, we don't trade on 4 hour, neither do we trade on the daily time frame. So we have to jump on the lower time frame to anticipate where the dollar will be heading to. Yes, as you can see that we are currently trading on this kneeling range because you can see that price took this liquidity and broke structure to the downside, retraced to the premium levels, broke structure to the downside, and again probably in another correction phase to the premium levels before we go to the before it goes to the downside. Yes, and I think for us to clearly see what the dollar is doing, and I think we can catch a glimpse of what is happening on the 15 minutes time frame. I don't really advise for this, especially on these times. I don't really vouch for anyone to go on 15 minutes time frame, especially on a Sunday. So, but nevertheless, let's see what the price did on a Friday. Yes, on a Friday we can see that the price retraced and broke structure to the downside. Okay, after taking this liquidity here, let's label it this liquidity here. Yes, the price when the price melted to the downside immediately after it took this liquidity. But we can see that again, uh, if this market needs to continue to the downside, this high needs to hold, because this should be a strong high. It has, since it has taken liquidity here, but we can see that this high is being violated, and so due to the nature of the price, we can easily see the price probably retrace and retrace higher to the premium level and short to the downside, or can just retrace direct to the downside, then print that lower low again. Yes. Uh, yes, that's my analysis on dollar index, and more so put more emphasis on the hourly time frame analysis, because I told you the geopolitical nature of what we are currently and the war in Iran. I don't think it's a good idea for anyone to be going on 15 minutes time frame, especially on a Sunday. Yes, and this is just for confluence. We don't trade dollar index. We just analyze dollar index for confluence. Most of the time, I usually trade Euro USD, GBP USD. Yeah, and so dollar index is for confluence. And if you are trading dollar denominated pairs, you have to start with dollar index pair, because it will show you where the price will be heading to for the other pairs. Yes, let's analyze Euro USD. I think this week I only have clear analysis right now on Euro USD and DXY only. The other pairs, I think, they are in their own realm. Never mind with my yes. As usual, like I told you, and especially with Euro USD, whatever analysis you have on dollar index, the same analysis, the same analysis should be inversely correlated to the Euro USD. But if the chart is showing you otherwise, yeah, sometimes there can be a divergence, but most of the time, dollar index and Euro USD will show you exactly the same patterns, only inversely correlated. So yeah, I think I'll make a video to show. Yes, currently we are trading on this range, and you can see that we have retraced to the 61.8 Fibonacci retracement level, and we have started to break structure to the downside. But I'm still anticipating this price to push at least further to 78.6, in line with our analysis on dollar index pairs, to at least take this liquidity here, and before we start to pump to the downside. Yes, to get a clear picture of what I'm saying, we have to head to the 4-hour time frame. And yes, you can see that let me zoom in the chart so that you can see what I'm saying here. Yes, we can see that immediately after the price printed this high and broke structure to the upside, we shifted the structure to the trend shifted to the downside, or the trend changed to the downside. And yes, there was somehow a liquidation on this gapping of Mondays, like I told you, due to the geopolitical nature and landscape that we are in, due to the war in Iran and the implications it has on the energy and oil. Yeah, that's a whole another story. I don't want to go there. Yes, but we can see that immediately price has shifted to the downside, and as usual, when price breaks structure, it has to retrace at least to premium levels before it continues to break structure to the downside. And clearly, we can see that immediately after the price broke structure to the downside, there was a relief to at least around 61.8 Fibonacci retracement, and again, market printed lower low. But again, this is where we have to be careful. Yeah, we have to be careful and yeah, look here. Because immediately after we took this liquidity, after we broke the structure to the downside, I was anticipating at least we get at least a at least we take this liquidity before we change the structure to the upside. But that didn't happen. We just took this last liquidity, and the price, we can see that it has shifted. Due to what I was anticipating last week, I had a short trade here. We will see that on 1 hour time frame. Yeah, I was anticipating that we could take this last liquidity before we head and take the liquidity, sell side liquidity, before we start going to the downside. But the price did what it did, and so as good traders, we have to be reactive. We can't be predictive. No one has ever made money predicting this market, and never will ever a novice trader or a retail trader make money by predicting these markets. So as good traders, we react to these markets. Yeah. Never mind me with a rhyme there, but back to the market here, we can see that the market has broken structure to the upside, and currently we are in a corrective phase. Yes, I think everyone knows, or I think everyone knows you have to buy low and sell high to make profits in these markets. And so what am I doing here? I'm analyzing the markets and looking for lows and highs to sell and buy in these markets. Yes, like I told you, on a Thursday, I had this setup. I was anticipating that we could push lower and probably take that low on the left side before we head back up. Yeah, but the markets did what it did. Luckily, I had this trade on a Thursday evening, and so when it came on Thursday, because it was on a Friday, it was a holiday, Labor Day. The markets and I know normally markets they tend to not move that big time on a holiday, and so with what I was seeing on the charts, it didn't really it did not really sit right with me, and so I closed my positions, and just before I closed my position, just after I closed my position, you can see that price immediately shifted to the outside again and took the early sellers here. And immediately, and I think for us to get this picture, we have to go to 15 minutes. Then, though I don't really advise for anyone to go to this extreme, especially on a Sunday. and especially this geopolitical landscape that. But nevertheless, let's just go down here and see what really happened. Yes, my trade was here on Thursday after we took this liquidity, and we can see that this is on a London session on Friday. Immediately after we set this liquidity, price started printing higher highs and higher lows. Yes, and so lucky me, due to the experience that I have in these markets, I was able to foresee it. But I'm not really that type of a trader who closes any setup once I either break even or just let it run. Yeah, but we can see that on a Friday, immediately after the London session, it swept the Asian liquidity, and this liquidity that was printed uh, the day before during the New York session. It got charged by this liquidity, and immediately price shifted to the upside. But again, we can see that bears took control in New York session, started to push price to the well. With this, uh, whenever whenever a law that has swept a liquidity prints a high, usually that law is a strong law. Yeah, to me, and due to the rules that I have, liquidity inducement, I usually take that liquidity as a strong. I usually take that law as a strong law. But we can see that immediately, the New York traders took control, especially bears took control of this chart. This pair started printing lower lows and taking this strong low. So with me, I anticipate that we will correct lower before we starting up again. So probably to this demand zone, yeah, maybe take this liquidity, yeah, maybe take this internal liquidity, but we shall see, we shall see. Like I told you, I'm not so big in this market. Usually I react to this market, and the market will always show you. And yeah, I think that's it for today. Uh, I really wanted also to look at GBP USD, but I think in doing its own thing, and whatever it's showing me on the charts, he is not sitting right. And so yeah, just to remind you again, this is Traders Hub. Yes, this is Traders Hub Kenya YouTube channel, where we'll be posting educational content and weekly market analysis every Sundays, Tuesdays, and Thursdays. And see you on Tuesday. Ciao.